Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Verdon in London, and these are the stories that set your agenda. Bad news is good news. The S&P 500 hits a record high on more signs of a cooling US labour market, fueling bets on rate cuts from the Fed. We're going to get non-farm payrolls later today. Fighting for survival, the French Prime Minister holds last-ditch meetings ahead of Monday's confidence vote. We'll break down what a defeat could mean for the economy. Plus, taking on Nvidia, Broadcom soars on reports of $10 billion of orders from a partnership with OpenAI to design and produce accelerator chips. Happy Friday. We're heading into jobs day with stocks on the S&P 500 at an all-time high. Traders convinced that we're going to get a Fed cut in September, and it doesn't look like there's anything that this payrolls report could do to persuade them otherwise. We've got futures pointing higher on both sides of the Atlantic. Stocks already in Asia riding the wave of positivity. And flip the board over to the cross-asset picture, because you've got the two-year Treasury yield at its lowest in about a year. 358.16 is where we're at right now. What 16 on euro dollar, the dollar weaker again today. And look at gold here. We're on for a third weekly gain, but oil down for the week. It looks like it's going to be as we head into that OPEC Plus meeting, maybe more production hikes. But let's get over to Asia now. Asian markets gaining after that Wall Street rally as the soft hiring data's fueling these bets on a Fed cut this month. Paul Dobson, our executive editor for Asia markets, joins us now. Paul, looks like a sea of green on your screen.
Yeah, good morning, Lizzie. It is certainly a positive day over here in Asia. It's impossible to look past the payrolls report, which is coming up the end of our day. So we'll see whether it holds into Monday. But what you're seeing there is some expression of the risk on moves that you were talking about in the form of a weaker dollar. If the payrolls number delivers as we would expect, then that might push down US yields further as people price in a Fed cut, and therefore you have a weaker dollar, so you have Asian currencies getting a lift in anticipation of that today, and also Asia's stock markets riding that wave. Interestingly, a bit of a recovery in China after what's been a pretty negative week. We heard earlier on Wednesday, Thursday, there were moves to try to cool down the rally that we've seen in Chinese equities, and that certainly did have an effect as we had a couple of pretty negative days. But today we're recovering somewhat into the weekend. So some signs that maybe, just maybe, the authorities would be able to actually achieve the slower bull market that is their intention. So a little bit of good news in China, positive news across the rest of the markets as they price in, and then everybody will be watching the TVs and the video screens in our evening to figure out what those payrolls numbers are going to look like and what it means for our week next week.
All right, our executive editor for Asia markets, Paul Dobson, we thank you for that look at Asia markets. But heading over to the US, as we've said a few times now, the S&P 500 hitting an all-time high ahead of today's jobs report. Any further signs of labour market weakening likely to reinforce these bets on a rate cut this month. Now, the Fed's John Williams says that he expects rates will come down eventually.
Looking ahead, if progress on our dual mandate goals continues as in my baseline forecast, I anticipate it will become appropriate to move interest rates towards a more neutral stance over time.
Well, Bloomberg's Valerie Teitel's here to set us up for the data. Val, are we just going to get more cover for these cuts for which there's so much political pressure?
That's right. Clear your desk for 1:30 p.m. later today. This is a big one. A lot of volatility priced into this market on this print today. The estimate is for 75K, Lizzie, which is the lowest estimate since December 2020. And if you wipe out COVID, you have to go all the way back to 2011 to find a run rate this low with 75K, the consensus estimate. Attention will also be on the unemployment rate, because the theme lately is that labor supply has been dropping in tandem with labor demand. demand. If we see labor demand drop quicker than labor supply, we will see a rise in the unemployment rate. Attention will also be on the revisions, Lizzie. The revisions last month were the biggest in 4 decades, and this is the first time the NFP will be released with a new BLS chief. But we are nervous heading into this print, Lizzie. A string of weak labor market data this week has captured the market's attention and spurred this bond rally. Jolts off the gate this week showed a rise in layoffs. ADP missed there yesterday. Private payrolls were running at a rate half of that of last month. And then finally, initial jobless claims continue to creep higher, again, higher than expectations yesterday, the highest since June. Take all this combined, it's led a bond rally this week. 2-year yields are actually now at year-to-date lows for that policy-sensitive front end. We've also seen the Fed's terminal rate implied in the market, that's also hit a fresh low for this cycle. So this easing that's happening in the front end has allowed that equity market to breach another all-time high. The first one in 5 sessions, Lizzie. S&P 500 up now over 10.5% on the year.
Say it one more time for the cheap seats at the back. Well, the S&P at an all-time high. Happy Friday to you. That's Valerie Titel. She'll be back with the opening trade at 7. But let's dive into the Fed story, because the president's nominee for the Fed's Board of Governors, Stephen Miron, has pushed back against Democratic concerns that he'd just do the president's bidding when he gets to the central bank. Now, there were concerns about Miron's decision to keep his White House job if he gets to go to the Fed.
Look, the president nominated me because I have policy views that I suppose that he liked. If I'm confirmed to this role, I will act independently, as the Federal Reserve always does, based on my own personal analysis of economic data, my own personal analysis of the effects of economic policies upon the economy, and act based on my judgment of the best economic policy possible.
For the latest, let's bring in Bloomberg's Balazs Pence, who's been watching that testimony for us. Balazs, are we expecting Miron to be confirmed by the Fed's September meeting? And is the expectation, given that his policy analysis conveniently matches the president's analysis, that he'd be pushing for a 50 basis point cut?
Well, the bottom line, Lizzie, is that Miron remains on the fast track, and there's a good chance that he will be confirmed before the next Fed meeting. Look, there are concerns about his independence, and the Democrats pushed him pretty hard on that, but the opposition party grilling the president's nominee isn't exactly a novelty. And the fact remains that he would need to lose 4 Republican votes for his confirmation to be in jeopardy, and there's no sign of that happening. And as Miron said, the president likes his policy views. What does the president like? Lower rates. We don't know how far that might go, but Miron has been pretty vocal about his belief that the tariffs will not result in any sort of sustained inflationary pressure. So we can assume that he will indeed be on the more dovish side if he is indeed on the Fed when the next meeting begins in 11 days.
And, of course, they're going to be monitoring the jobs data today, Balazs. What did Miron have to say about where the data come from? The BLS, the Bureau of Labour Statistics, who, of course, the president fired the boss.
That's right. Miron has been among those administration officials who have been quite critical of the Bureau of Labor Statistics. He hasn't, he sidestepped the question about whether those numbers were faked or there was any fraud committed. He did say that there are a lot of issues, a lot of structural issues about BLS data. And to be fair, there has been a lot of criticism about the way that data is collected. That data tends to be very noisy. So that makes it even more interesting what we hear later today when the Fed gets one of the last pieces of the puzzle that might just cement that rate cut later this month.
Yeah, who could forget last month's revisions? But meanwhile, we've got the US Justice Department opening a criminal investigation into Fed Governor Lisa Cook, whether she committed mortgage fraud. Balazs, is she going to be around for the September vote?
That's a great question. It's less than 2 weeks to go, and we still don't know. The Department of Justice filed this criminal referral that increases the pressure on Lisa Cook. But the case in court continues. Lisa Cook asked for an emergency injunction to let her stay on the Fed, but the judge has not said when she might rule on that. In the meantime, the administration filed more information, and they pushed back pretty hard on the idea that the mortgage allegations are just a pretext and that the president wants her removed because of her policy stances. But that case continues, and we will have to just wait for the court to make a decision on whether she will be able to continue, whether she will be there on September 16th when the Fed meets.
All right, Bloomberg's Balazs Pensby, thank you. Have a great weekend when it comes, but we're not quite there yet. Let's look at what's on the docket for the day ahead. At 7 a.m. London time, we get UK retail sales. They're expected to have risen in July. We also get German factory orders, also have expected to have risen. But that's just the warm-up, isn't it? Because at 1:30 p.m. London time, we'll get that US jobs report. The economist's expectation is 75k in August, a tick up from July's 73. But remember those revisions last month. I'm sure you're going to want to tune in for this. Also, remember that you've got to keep an eye on Washington, because the Wall Street Journal reports that today is the day when the Treasury Secretary Scott Bessent is going to start his interviews for Myron's successor, who will be, of course, the next Fed chair when Myron's term expires in January. But you can get a roundup of the stories you need to know to get your day going by looking at today's edition of Daybreak. Terminal subscribers can find it by going to DAYB Go. Coming up on this programme, Broadcom soaring on a report that it's helping OpenAI to create an AI chip to take on Nvidia. We'll get you the details of that next. Plus, later on in the programme, the French Prime Minister François Bayrou says that he doesn't regret calling a confidence vote and claims that he's, quote, putting the future of the government on the table. So we'll get to that later in the show. This is Bloomberg.
It's Jobs Day, and Bloomberg has the report under surveillance.
This is going to get Wall Street's attention.
They're not going out and hiring a ton, but they're also not firing. So basically, you have a frozen labor market.
Today, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
Financial conditions versus economic conditions. There's a key distinction to make.
And that really is the key question for policy going forward.
The August Jobs Report. Today on Bloomberg. Context changes everything.
Welcome back to Bloomberg Daybreak Europe. Now, Bloomberg has learned that Broadcom is helping OpenAI to design and produce an AI accelerator chip from next year, getting into this lucrative sphere that's currently dominated by Nvidia. Now, the chipmaker surged after hours, with the two firms planning to ship the first chips starting next year. And joining me now to talk about the significance is Annabelle Drulers, host of Bloomberg Tech Asia. Morning, Belle. Just talk us through this announcement and why it matters so much between Broadcom and OpenAI.
Yeah, no, it is very significant. I mean, we had the earnings out yesterday, and it was sort of one of the key themes that came out of the numbers. I mean, Broadcom indicated during the call that they had this customer signed on to their AI accelerator business. It was going to mean more than $10 billion in orders. They didn't specify exactly who, but that's been the reporting, that this new Broadcom customer is OpenAI, and they're going to be working together to produce an AI accelerator that's going to go into production from 2026. So, I mean, OpenAI, apparently they're looking to use the chip for their own internal purposes initially, but it certainly is quite significant, given as well you have Broadcom saying that they do expect the outlook to improve significantly for the company starting in the fiscal coming year.
Yeah, so is it enough to soothe the concerns about the company's slowing growth?
Yeah, I mean, I guess that's sort of the big question. Accelerators are very essential to the development of AI tech firms. Meta, for instance, Microsoft, I mean, they're just some of the big customers for the likes of Nvidia, for instance, that really dominates this space. So we have been previously reporting that OpenAI and Broadcom are working on an inference chip design. It is intended to run or operate AI services after it comes into effect. I mean, it's seen as, yes, certainly one of the big factors that could boost Broadcom from here.
And meanwhile, we've had President Trump saying that he's going to impose chip tariffs very shortly. This was at that White House dinner he hosted for the tech bros yesterday, Belle. What do we know about the rate, about whose goods are going to be spared from these tariffs, and what else came out of the dinner?
Yeah, so the rate he didn't specify during the meeting, but he did say it's going to be relatively substantial. So that was sort of one of the key takeaways. So this dinner took place yesterday evening in Washington, and as you said, it was really the tech bros, but it was the who's who of the tech world essentially. I mean, there was Sam Altman, there was Mark Zuckerberg, there were the heads of Microsoft, of Alphabet, Oracle, AMD, Bill Gates. I mean, it was very kind of star-studded event. You can see Mark Zuckerberg there, for instance. This was sort of one of the key takeaways that Trump said that, yes, these substantial tariffs are coming soon. Who they will be applied to, it's companies that don't already have some sort of manufacturing in the US or aren't looking to reshore it. He did actually specifically call out Apple, for instance, saying that they would be, looking okay, given Apple has pledged to boost its investment in the US.
And speaking of Apple, just breaking on the terminal bell, we have that Apple's India revenue hit a record. Just how important is that market for the company?
Yeah, India is a significant market for Apple. I mean, Apple, of course, it's really faced slowing sales growth in China in particular. So getting this sort of annual sales growth in India, as you said, hitting that record, nearly $9 billion in the last fiscal year, does signal growing customer demand for its flagship devices. So it is really important because it is expected as well to become a growing market in the coming years. We've seen them, for instance, expanding their retail footprint. Even just in the last few weeks, they've been really committing to further iPhone production as well in the country. We've seen as the major assembler, Foxconn or Honhai, setting up further facilities there. So, it's an important sales surge, I guess, to note, especially because, as I said, Apple is facing slowing sales in the mainland market.
Crucial context. Annabelle Drewler is our Bloomberg Tech Asia anchor. We thank you so much. Well, coming up on the programme, Turkey's central bank governor says that he's optimistic on tackling the country's inflation problem. We'll get you the details from our exclusive interview with him next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, you'll remember that display of Chinese military might this week, but what you might not know is that Bloomberg Analysis has found China's military is facing the biggest purge since Mao. Xi Jinping has ousted nearly a fifth of the generals that he appointed since coming to power in 2013, and the consequences could reshape the nation and beyond.
This is the world's largest military.
An elaborate military parade showcasing new weapons, really a show of force for China on the global stage.
Xi Jinping has made it a stated goal to modernize China's military and turn it into a fighting force capable of winning wars.
But behind the choreography, it's undergoing its most serious leadership shakeup in decades. During Xi's third term, 15 of the 79 generals promoted under him have either gone missing or been investigated. It's the biggest purge of China's military personnel since the chaotic Mao Zedong era ended in 1976.
Every time you think, surely this is as big as it can get and as high as it can go, it does seem to just keep getting bigger. He obviously wants to centralize control, even at the expense of having people that he himself has personally appointed removed from that party structure.
This is key as Xi nears a potential fourth term that would stretch his time in power to 20 years. The global consequences will be far-reaching, with tensions between the US and China rising on many fronts. And then there's this.
A top U.S. admiral says signs suggest China is sticking to its ambitions to be ready to invade Taiwan by 2027.
The competition between the United States and China is the most dangerous and the most impactful when it comes to the militaries of these two countries. Anything that changes the dynamic there is inevitably going to change the way the world works politically, economically, technologically, in big and small ways.
Well, subscribers can watch that documentary right now on the terminal and at Bloomberg.com, as well as on the Bloomberg Originals YouTube channel tomorrow. Now to Turkey, where the central bank governor has struck an optimistic note on the inflation outlook following worse than expected data and market turmoil, suggesting that investors may have been too hasty in reducing their forecasts for rate cuts. For more, Bloomberg's Deputy Turkey Bureau Chief Beryl Akman joins us now. Morning, Beryl. So is Turkey's economy in good shape?
I think that's a very good question, Lizzie, and the answer depends on who you ask. So earlier this week, we have seen some disappointing data both on the inflation side in August as well as for growth in the second quarter. Now, despite rate hikes in the second quarter, we saw demand remain quite strong, and that worried investors. And in August, we saw higher than expected inflation. But Central Bank Governor Fatih Karahan has remained more upbeat, and he's urged investors to look at the breakdown of data, saying that the underlying trend in inflation and the components of GDP data indicate that demand pressure is easing and that is contributing to disinflation. So for him, the economy is improving in shape, and his remarks come as Wall Street, like you said, was a bit worried that the outlook wasn't looking so great.
OK, so Wall Street taking a different view of the inflation figures, perhaps, to the central bank governor. But has the removal of Turkey's main opposition unnerved investors? And what's it going to mean for the future?
Absolutely. So since the start of this year, really, we have seen the main opposition party, the CHP, face an intensified judicial crackdown. And that had reached an unprecedented climax in March when Istanbul Mayor Ekrem İmamoğlu, also seen as President Recep Tayyip Erdogan's strongest rival, was jailed, and that had caused a market rout. Now, earlier this week, there was another court ruling against the CHP that removed their Istanbul administration, a high-profile administration, and it was seen as an indication of what's more to come for the main party. So that is unnerving investors on two sides. One, they're reminded of the market rout in March when the central bank was forced to sell billions of dollars in reserves and reverse their rate-cutting cycle at the time. And they're also worried about the democratic backsliding and whether this will cause more unrest, as well as, spill over to the economy. So there are a few other cases lined up against the CHP, the main opposition party, most prominently one on September 15, and that is definitely shaking investors a little bit. But during his interview yesterday with Bloomberg, Central Bank Governor Karahan said that they're watching these external factors that might impact the inflation outlook, and they take steps as necessary should anything worsen the disinflation process.
OK, Beryl, thank you so much for that exclusive interview. Bloomberg's Deputy Turkey Bureau Chief Beryl Akman. Now to some other stories making news this morning. 12,000 members of the populist UK Reform Party are gathering in Birmingham today for a two-day conference, a key test for leader Nigel Farage. Reform, which has led opinion polls in recent months, has grown rapidly and now has almost 240,000 members. Elsewhere, Donald Trump has asked the Supreme Court for permission to fire the only remaining Democrat on the Federal Trade Commission. He's seeking to overturn a federal appeals court decision to reinstate Rebecca Kelly Slaughter. The case tests a 90-year precedent that allows Congress to prevent some high-ranking officials from being fired. And a wind farm venture backed by Orsted and 2 US states in New England are suing the Trump administration in an effort to restart construction of an almost finished offshore project that was abruptly blocked by the government last month. Connecticut's Attorney General blasted what he described as President Trump's all-out war on wind power. Well, those are some of our top stories this morning. But coming up on this programme, European leaders pledge to provide Ukraine with security guarantees as allies wait for the US to cement its commitment. We'll get you more on that meeting of the Coalition of the Willing next with Oliver Crook. So stay with us. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Verdon in London, and these are the stories that set your agenda. Bad news is good news. The S&P 500 hits a record high on more signs of a cooling US labour market, fueling bets on Fed cuts. We'll get the non-farm payrolls later today. Fighting for survival. The French Prime Minister holds last-ditch meetings ahead of Monday's confidence vote. We'll break down what a defeat could mean for the economy. Plus, taking on Nvidia. Broadcom soars on reports of $10 billion of orders from a partnership with OpenAI to design and produce accelerator chips. Well, those are our top stories this morning. Checking in on these markets, if you're just joining us, it's 6:30 a.m. here in London, and we've got stocks on the S&P 500 heading into this jobs day at all-time highs. They're convinced a September Fed cut's coming, and it looks like that there's not much this payrolls data can do to change that. So you've got Asian shares here riding the wave of optimism, and futures on both sides of the Atlantic pointing higher as well. Flip the board over to the cross-asset picture, and the two-year yield is at about its lowest in a year. We're at 357.93 right now. Euro dollar at 116, the dollar weaker. Gold heading for its third weekly gain, but oil headed for a weekly loss here ahead of this OPEC Plus meeting, which could deliver another supply hike. But let's get back to Europe now. French Prime Minister François Bayrou saying that he doesn't regret calling a confidence vote, putting his government on the line as France is burdened with debt and the political parties must each take responsibility. In this interview on French TV, he said that he was, quote, putting the future of the government on the table. This as French Prime Minister Emmanuel Macron says that he'll seek to avoid a snap election if Bayrou loses. Jean Dalbar, economist for Bloomberg Economics, has been looking into these likely fallouts, and he joins us now. Jean, what are the different scenarios for France? And can you tell us all about your new uncertainty index that's on the terminal?
Yes, good morning. So indeed, France is facing a new political crisis. This is particularly striking when you look at our new economic policy uncertainty index, which has reached its 2024 highs recently, and it illustrates the political crisis that France is currently facing. In this context, we expect Bayrou's government to collapse on Monday during a confidence vote at Parliament. In our central scenario, the President Macron would name its successor, a new PM, afterwards, after the collapse of the government. We think the new PM will lean toward the center-left, toward the Parti Socialist Party, in order to reach a deal with the current coalition, to reach a deal with the center, and to reach a deal with the center-right on the budget, which is the most striking issue for France at the moment. And it won't be easy, but that's still our central scenario. The main risk to our scenario would be for the President Macron to dissolve Parliament and to call for a new election. We think it is unlikely, but still this is a risk. And that dissolution of Parliament and new election would lead, in our view, and most probably to a new fragmented Parliament. So it won't solve the issue, but it could lead to a new government led by the far-right party, the National Rally. So that would be the main risk to our scenario of Prime Minister Bayrou falling on Monday.
OK, so a tail risk, but one we've got to consider nonetheless. But look, Jean, is a political crisis about to turn into a debt crisis or an economic crisis here?
So our view is that it is only a political crisis yet, but it could in the future become a debt crisis or an economic crisis. But at the moment, it's only a political crisis. The spread of the French debt against Germany, the OAT bond spread, has widened by only 10 basis points. So it has reached a level which is lower than it was like last year during the previous political crisis, when the PM Barnier was ousted during a no-confidence vote. So we think the market is currently pricing only a political crisis, and it is right to do so because the fiscal issues for France are not short-term, they are medium-term. When you look at the debt servicing costs of France, it will rise a lot in the coming years, and that will be the main issue for this government and for the government to come, is to be able to consolidate public finances and to curb the deficit. And it won't be easy with a fragmented parliament, and that's one of the reasons why the current government will fall. So that's the main issue for the coming years. So that's the fiscal part, and the economic implications of this new political crisis are just mainly the increase in uncertainty that is weighing depending on domestic demand. That's something we already face in France. If you look at how households are saving, and they are not consuming a lot, they are saving a lot. And that's one of the reasons behind is because they are facing a lot of uncertainty. And it will weigh on the recovery, especially next year. And so that's the main issue, because we were expecting France to rebound from its low growth in 2025. France benefits from easing financing conditions from the ECB. It benefits from a structurally less exposed economy to US tariffs, and that political crisis could be a downside risk to that potential rebound of the French economy.
So 77 basis points is where we left the oats-bundt spread yesterday, but we've seen this more global recent sell-off in long-term maturities. Is that set to continue in your analysis, Jean?
So we published a piece on the 30-year segment of the sovereign curve markets. In our view, the risks are mainly concentrated on the very long end of sovereign curves, not on the 10-year point. And the 10-year point would be the most important part of the curve to watch, especially because France is a massive issuer in Eurozone and is an issuer which is skewed toward the long end of the curve, but mostly on the 10-year part. All that to say that the 30-year sell-off isn't really a big deal from a fiscal perspective in France especially, but also in the UK or in Japan, for example. When we analyze the drivers behind the sell-off in the 30-year markets, our understanding is that there are a lot of common global drivers behind the move in the markets, and only some residual domestic drivers like the political crisis in France. If you look at the common drivers, it's really basic. It's like higher deficits around the world, central banks doing QT, it's a shift in some investors' preferences, if you look at Dutch pension funds, for example, but also some market technicalities and seasonalities. So in the end, it's not a specific crisis, it's not a specific theme for France, it's mainly something global. And we think, given the sell-off that we have seen, that it might stop at the current levels that we are seeing. But the main point, the main risk would be, in our view, that such kind of sell-off leads to a financial crisis. So that would be the main risk in our view. It's not a fiscal risk, it's a financial risk, which is reminiscent of what we have seen in September 22 with the LDI crisis in the UK. And just one word to finish on that 30-year topic is that we think that markets should get used to it, especially because, in our view, the volatility will structurally increase in the future, and the natural interest rate will increase in the future. So such kind of events on the long end of the curve could become more frequent in the coming years.
Yeah, Jamie Rush was making this very argument on this programme yesterday morning. Jean Darbat, we thank you so much, of Bloomberg Economics. And I do recommend a look at that Economic Policy Uncertainty Index, new from Bloomberg Economics. But let's stay in Europe and turn to the geopolitics. European leaders pledging to provide security guarantees for Ukraine if a ceasefire can take hold. Now, France says that 26 countries are ready to contribute to guarantees, including troops, while the US support for the measures is going to be finalised in the coming days.
Cette coalition des volontaires qui
This coalition of the willing, which is a coalition for peace, has indeed today put on the table and clarified with a military and political commitment the contribution of the 35 members in order to provide these guarantees of peace and security to Ukraine.
Presence can be different. It is in the sky, the sea, and on land. We are also discussing a matter which I believe we will discuss more. It's the backstop of America. We count on it. We are very grateful to America for supporting and being a part of the security guarantees for Ukraine.
Our Europe correspondent Oliver Crook's been watching that meeting for us. Morning, Ollie. Macron there, frustratingly, deliberately vague on the reassurance force. What do we know about who's going to commit what to where and when?
Well, we don't know a lot of the answer to those questions because, as you say, it is a little bit vague, and I think partially deliberately, but partially because this is a very tricky political thing to work out domestically as well. But we did get a little bit more clarity on what exactly is intended here, what the exact commitments are. So again, just to reiterate here, this coalition of the willing, which is 35 nations strong, there's two main pillars that Macron outlined in the press conference yesterday. The first pillar is the principle that there should be no limit to capacity or format for the Ukrainian army, which is, of course, course, one of the prerequisites that Russia has put on. They effectively want to demilitarize Ukraine in the event of a ceasefire, or I should say a peace deal, but basically a commitment to regenerate the Ukrainian military. The second part, and this is the thing that gets most of the attention because this is the most sort of crucial part, is this reassurance force. And what we got yesterday is apparently there is now a firm commitment of 26 of those 35 nations to commit troops in some capacity as a sort of peacekeeping force in Ukraine the day after. They will not be frontline troops. This is very clear. This is something that Macron made very clear. This is not about antagonizing Russia. This is about deterring Russia. They will be on the soil, potentially the air, and the sea. And of course, there was also that Trump call, which is a crucial part of the meetings yesterday, the discussion with Donald Trump. And what Macron has said from that is that basically the U.S. position is not clarified. We do not know to what degree they are willing to support the security guarantees. That will be clarified over the next couple of days. What we have reported in the past that the U.S. support could take the form of intelligence. It could take potentially air support. Will certainly not involve troops, and potentially also obviously equipment and hardware. Couple footnotes, Lizzie, to make just sort of about all of these sort of grand commitments. The first is there is a question about money and boots and politics, right? We are talking about Keir Starmer and Emmanuel Macron spearheading the coalition of the willing. These are both extremely weak governments that don't have a lot of sway at home, and they don't have a lot of money, right? How do you pay for all of this? And then the last point is all of this planning is for the day after. We are still very much in the day of the war of Ukraine. There has not been any sort of indication that we're getting closer, as far as Vladimir Putin is concerned, to a ceasefire and indeed to a peace deal.
All right, Bloomberg's Oliver Crook, we thank you so much for all that crucial context. Now, already at this programme, we've brought you one central banking interview. We've got another for you as well. Denmark's central bank governor says that it's to cut its economic outlook for 2025 substantially because of the weaker sales growth over at Novo Nordisk, which, of course, is the country's biggest company. Christian Kettel Thomsen sat down with Bloomberg's Sanne Vass at the bank's HQ in Copenhagen for another exclusive interview.
This will impact the Danish economy, but there are sort of a couple of elements to this that should be taken into account. First of all, pharmaceuticals or pharma production is very productive. That means that it's not so. There are not so many compared to the value added in this industry. There are not so many employed by it. It's more like it builds also a lot of research and development and intellectual property rights compared to other sectors. The other is that there are not so many spillovers to the rest of the economy. That means there's not so many employed in companies delivering stuff to the pharmaceutical companies. So the employment effects are not that large. And overall employs a little bit more than 1% of the Danish workforce. So it's not sort of in macroeconomic terms, it's not very specific. It can of course be very important for an area or for the people involved, but in macroeconomic terms, we're not that concerned about it. Then there's also this question about where are things produced actually, and Novo actually produces quite a lot of its products abroad, much of it in the US. So that also means that the impact on the employment in Denmark will be less. But still, we're talking about slower growth than before, and not, as I understand it, and not sort of declines, which we have no reason to expect.
Back in March, the Danish Central Bank forecast that Denmark's economy will grow 3.6% this year. You're due to publish new forecasts later this month. Do you expect that you'll have to cut your forecast?
Yes, definitely. We will reduce our growth forecast sometimes in the 20th of September, 25th, I think, 24th. And this is due to two things. And probably we will reduce it quite significantly, and we've seen that from other forecasters who have come out recently, the Ministry of Economics, which reduced it from 3.5 around to 1.4 actually. But there's sort of two different aspects to this. One is what sort of impacts the growth forecast sort of going forward. and I can come back to that. But then there's also that because of revised national accounts and slower growth in the beginning of this year, we will have to put it down. But that doesn't really impact things going forward. Going forward, it will particularly be the effects of tariffs, as we talked about before, the U.S. tariffs, and also there will be an effect from this, from the Novo Nordisk sort of lower sales growth forwardly. Some of this from the Novo part will be in the U.S., but still it will reduce Danish growth going forward. But it's not so that it's not a completely different growth picture as the numbers might indicate. If you go from 3.6 to around 2 or something, then it's not as dramatic as that.
Well, that was Christian Kettel Thomsen, Governor of the Danish Central Bank, speaking to Bloomberg's Sanne Vass on the centrality of Novo Nordisk to the Danish economy. And Bloomberg's hosting a live Q&A on Novo Nordisk this afternoon. The blockbuster success of Ozempic and Wegovy having made Novo seem unstoppable at one point. But now, as underscored in that interview, the drug maker facing a host of challenges. So our reporters are going to be answering your questions from 1 p.m. London time this afternoon. Just head to Bloomberg.com for that. Now, staying in Denmark, we have breaking lines out at Orsted. They say that they're seeing full-year EBITDA ex items at 24 to 27 billion Danish kroner. The estimate was for 26.07 billion Danish kroner. So pretty much in line here, bang in line. They say that they see a primary driver for the cut being low offshore wind speeds. They still see full-year gross investments between 50 and 54 billion kroner. And they see they're adjusting their guidance for 2025. Now, of course, we know that Orsted is suing the US government as it tries to revive the building of its offshore wind farm in New England. It's been blocked by the Trump administration despite being about 80% complete. So difficulties for the stock, as you can see on the screen there. But coming up on the programme, the oil market remains on edge as investors look ahead to the OPEC Plus meeting this weekend. We'll get you details next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now it's 6:50 a.m. here in London, and we've got oil traders on edge as they await the OPEC Plus meeting over the weekend that could see the group sign off on another supply hike. Let's bring in Bloomberg Horizon's Middle East and Africa anchor, Jumana Basetchi, for more from Dubai. Jumana, you're really plugged into this market. You speak to all the analysts. What can we expect over the weekend?
Yeah, well, maybe let's just start with the context. It has not been a great year for oil in terms of price performance. Oil futures down 10% year to date. And of course, there have been multiple factors that's been driving this underperformance. On one hand, you've got macro uncertainties pertaining to the economic outlook, the effect that tariffs are going to have on demand, global demand, some concerns weighing there as it pertains to demand, specifically coming from some of those Asian economies that were hit by reciprocal tariffs. On the flip side, you also had supply headwinds as well, with OPEC Plus surprising the market earlier this year with that accelerated putback of the 2.2 million barrels per day voluntary cuts that they had introduced a couple of years ago. Now, they've completed that first tranche, the 2.2 million barrels per day. The final clip was announced back in August. So attention now shifts to this other tranche that they also introduced back in 2023. That is 1.66 million barrels per day that they also took off the market then. Going into the weekend, our own Bloomberg team has surveyed a bunch of analysts. 17 of them are not expecting a change vis-a-vis this extra supply that could potentially be put back, but 6 are expecting a modest increase. And therein could create some issues when it comes to the supply outlook versus demand. Many analysts out there are anticipating a supply glut in Q4, beginning of next year. Goldman Sachs put out a note earlier this week saying that they expect an overhang of 1.8 million barrels per day by the end of 2026. And of course, if that does happen, it would put even more downward pressure on the price of oil They're forecasting that we should end up in the low 50s range by the end of 2026. Other analysts out there, we spoke to Citi earlier on in Horizons, UBS as well, they're more sanguine. They see oil sort of being range bound between $60 and $70, namely because of the inventory outlook, which still remains pretty muted compared to how much supply had been anticipated. And the second thing is the fact that OPEC Plus are still sitting on very little spare capacity. It is only Saudi and UAE that really have the impetus to bring extra production if needed to market. But all eyes on this weekend, Lizzie.
Indeed, and we're stuck in that range right now. $66 a barrel is where we trade. Ju, thank you so much. Our Jumana Basetchi, Horizons anchor out of Dubai. We've got plenty more still to come. All the charts you need for your trading day. This is Bloomberg.
In my view, I'm not expecting there to be some kind of, beyond that, some kind of longer term inflation, persistent inflation effects of the tariffs. And the reason I say that is because in my view, we're going to get, we're going to do our very best to get monetary policy right to make sure we're not allowing imbalances to appear in the economy. So we have to do our part to keep the economy on a good track, like as I mentioned, and then let the tariffs kind of effects just pass through.
The Fed's John Williams speaking there. Now, a few charts to set you up for your trading day. Just look at how treasuries have been defying the global sell-off that we've seen in your bond space this week. The white line is the US. You can see the other major economies up higher. And this really a downtrend back since April here. So defying that global pressure. A little wobble this week, but getting back on its feet as we look ahead to that jobs data later. Now, flip the board over because you can see we are waiting for the bond vigilantes, but at the moment you've got the 30-year defending that 5% level and the 10-year defending the 4.3% level. But the fight over the Fed chair and all of the other governors, the independents at the Fed, really just developing. So could these levels remain defended? We shall see. Flip the board over one more time. Of course, the highlight today is the jobs data. Here's what we're expecting. Focus on non-farm payrolls. Last time, 73K. This time, economists' expectation 75K. Will we get a surprise today? Could anything really knock these Fed cut expectations? It seems highly unlikely. But the US Commerce Secretary Howard Lutnick joining surveillance at 1:15 p.m. London time. Don't miss that. The opening trade next. This is Bloomberg.